Aotearoa. Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we leave with news. We're now in a new world economy, and it'll take some getting used to. The rollout and consequences will develop over days, weeks, months, and years. The immediate past is irrelevant today. Tomorrow will be quite disconnected from the recent past. But first up, we have a busy week ahead. On Wednesday, the RBNZ will release the results of its OCR review, and a 25 basis point cut is anticipated, taking it to 3.5%. It has been clearly signalled by the central bank, although we should note that much has happened to change in the immediate economic outlook over the rest of 2025 and beyond. The Indian central bank will also review its policy rate, also on Wednesday, and a 25 basis point cut is also anticipated there from the current 6.25%. Elsewhere, both the US and China will release CPI and PPI inflation data. EU retail sales data and German industrial production data will also come this week. But nothing will be as influential as the tariff war hostilities, punch and counterpunch. Over the weekend, China has responded to the US tariffs with its own sweeping restrictions on trade with the US, with more to come. In all, we count 8 major announcements on restrictions of trade with the US. China placed export restrictions on rare earth elements, squeezing supply to the west of minerals. These materials are used in optical lasers, radar devices, high-powered magnets for wind turbines, jet engine coatings, communications, and other advanced technologies. That leaves many manufacturers scrambling for fresh supplies of the critical materials they have relied on for decades. Late last week, we reported that Canada retaliated, but so far we haven't heard of EU retaliation, although they are huddling to plan a united response. And oddly, no US tariffs were applied to Cuba, Iran, North Korea, or Russia, even though the US runs a large $4 billion trade deficit with Russia. Fed boss Powell was speaking over the weekend, and he said the economic impact of new tariffs is likely to be significantly larger than expected, and the central bank must make sure that doesn't lead to a growing inflation problem. Quote, "The same is likely to be true of the economic effects, which will include higher inflation and slower growth," unquote. All this will have very large secondary effects on New Zealand, and our currency dived sharply on the news at the end of last week. It was even a larger negative reaction for Australia. Commodity prices have taken outsized hits, all consistent with pricing for a deep recession. Copper is down 16.5% since its late March peak. It is far from the only one, and adjusting is still underway. Gold wasn't immune. Zinc, nickel and aluminium are also down sharply. So far, food prices haven't really moved much, and the FAO report for March confirmed that. These secondary reactions will be widespread, however. The air freight market is expected to be thrown into turmoil, in an immediate scramble to get ordered goods, then a deep drought, as it will be for shipping. Collapses will further hinder the reduced trade expected. The key takeaway from all this is unsettling. This isn't the bottom, and it may only be the start of a steep decline. It certainly is a black swan event. That tariffs were coming was no surprise, but the size and comprehensiveness were very much larger than anyone, friend or foe, expected. Everyone should be worried, especially savers. Stagflation is our most likely future. For the record, there was economic data out over the weekend. The US non-farm payrolls came in better than anticipated, with a 228,000 seasonally adjusted rise in the month. The average monthly gain in 2025 is now the lowest since the 2020 year, and also lower than any year in the 2016-2019 period. Canada reported a 33,000 drop in March employment. Deeper rate cuts are likely from the Bank of Canada in response, and soon, on April the 17th New Zealand time. And across the Pacific, Japanese household income rose more than expected in February from a steep drop in January, but it wasn't enough to show a gain year on year. And German factory orders remained low in February and unchanged from January in an undershoot. But none of this recent history really means much anymore. The changes following that recent history are outsized and still moving. But this is what we see now. The US Treasury 10-year yield is now at 4%, down 25 basis points from a week ago. The VIX Volatility Index has jumped suddenly, moving up towards an extreme level. And Wall Street fell hard on its Friday trade, with the S&P 500 down 6% on the day, the Nasdaq down 5.8%. The S&P 500 futures trade suggests a small part of that, maybe 0.7%, could be recovered when Monday trade resumes. The price of gold will start today at just on $3,037 an ounce, up $17 from Saturday, but down a net $71 from Friday. A huge move, as gold is just being classed as another commodity. Also, even before the latest tariff chaos, the Germans were worried about a Trump America and talking about relocating its gold reserves out of New York. Those voices are louder now. Oil prices have dropped another huge $4.50 from Friday to be just on $62 a barrel in the US, and the international Brent price is now just on $65.50 a barrel. This market faces steep demand drops, just as it wants to increase production. The Kiwi dollar is now at 55.9 US cents, up 30 basis points from Saturday, but an enormous 220 basis point dump from this time on Friday, down 4.3%. Against the Aussie, we're down 10 basis points at 92.5 Australian cents, and the Aussie dollar took an even larger hit on Friday. Against the euro, we're up 20 basis points, but down 150 basis points from Friday at just under 51.1 euro cents. That all means our trade-weighted index starts today at just on 65.8 and down 120 basis points from Friday to its lowest since the brief pandemic dive on March the 20th, 2020, and before that in March 2011 as the GFC bit hard. And the Bitcoin price starts today at $81,097 and down 3.2% from this time Saturday. Volatility of the past 24 hours has been modest, a plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.